How do tax plans from Donald Trump-Kamala Harris affect Arizonans? What to know? Personal tax issues could change over the next couple of years as prior income tax rules might come back. Here's how presidential candidates Trump and Harris stand on that and other key tax issues. Most Americans are greatly affected by income taxes, yet presidential contenders Donald Trump and Kamala Harris haven't made this a big campaign topic, preferring instead to duke it out over inflation, border policies, abortion, and other issues. Regardless, tax issues could change in a big way over the next 2 years, especially as provisions adopted in 2017 as Trump's Tax Cuts and Jobs Act of 2017 could expire after 2025 if Congress and the next president don't act. Whoever wins the presidency in 2024 will be responsible for working with Congress to address the issue of a tax code that automatically regresses back, said tax researching firm Wolters Kluwer. That company recently evaluated the candidates' tax policies with an eye to what it considers to be accurate, nonpartisan, and unbiased information as of late September. Based on their income, Americans now pay taxes in one of 7 brackets: 10%, 12%, 22%, 24%, 32%, 35%, or 37%. These will remain in force through 2025. But without further action in Washington, the old brackets of 10, 15%, 25%, 28%, 3%, 35%, and 39.6% will return. Trump has proposed making provisions of the TCJA, a signature piece of legislation enacted when he was president, permanent. That means today's current tax brackets would continue. Harris wants to push the top rate back to 39.6%, echoing a prior proposal from President Biden. Wolters Kluwer notes that Harris, like Biden, has vowed not to raise taxes for households with income below $400,000. Under current law, capital gains and qualified dividends either avoid taxes or, more commonly, are taxed at a rate of 15% or 20%. Your taxable income determines whether you pay a 0%, 15%, or 20% rate. In 2024, the top 20% rate applies to the small slice of joint filers with taxable incomes over $583,750 and singles earning above $518,900. There's also a 3.8% tax on net investment income that generally applies to single taxpayers with net investment income in excess of $200,000 and $5,200 for joint filers. Trump wants to maintain this status quo. Harris seeks changes, especially on highly affluent taxpayers. She supports increasing the top capital gain rate to 28% from 20% and boosting the NIT rate to 5% from 3.8%. She also endorses an earlier proposal from President Biden to tax unrealized capital gains on assets not yet sold. While this would apply only to taxpayers with wealth exceeding $100 million, it contrasts with the current policy of taxing gains only after an asset has been sold. Tips earned by waiters and waitresses, bartenders, drivers, and other workers in restaurant and service industry currently are taxable and subject to employment taxes, just like wages. But that could change after the election. Trump has long proposed eliminating taxes on tips, and Harris also voiced support for the idea when she was asked about Trump's proposal. This is one of the few, if not the only, tax policy proposals on which both candidates agree, said Wolters Kluwer. However, neither campaign has gone into detail as to how this would function. Trump, at a Tucson rally in September, also pledged to make overtime earnings free from both income and payroll taxes. The Committee for a Responsible Federal Budget projects this could result in about $1.7 trillion in lost revenue for the federal government, already running hefty deficits, from fiscal years 2026 through 2035. Under current law, Social Security benefits generally aren't taxable for retirees with modest income, but taxes could apply for more affluent people, especially those with other types of income, such as withdrawals from retirement plans. In these cases, a portion of Social Security benefits, either 50% or 85%, are taxed. Trump has proposed eliminating all taxes on Social Security benefits. Harris hasn't proposed any such change. Under current law, set to expire after 2025, eligible Americans can claim a credit of $2,000 per qualifying child, with the tax break phasing out for taxpayers with modified adjusted gross incomes above $200,000 for singles and $400,000 for joint filers. A portion of the $2,000 child tax credit is refundable, with the refundable amount adjusted for inflation. It's $1,700 for 2024. If the TCJA expires, that will bring back a lower credit of $1,000, lower phase-out thresholds, and a lower refundable portion. Harris has proposed a maximum $3,600 credit, which was temporarily available in 2021, and a $6,000 credit for families with infants under the age of 1. Trump supports extending the TCJA legislation, which would lock in the $2,000 credit, the inflation-adjusted refundable portion, and the higher phase-out thresholds. This tax break is available to lower-income taxpayers with earned income up to certain inflation-adjusted amounts. The credit is based on a taxpayer's income and number of qualifying children. For 2024, taxpayers can claim the credit with income up to $66,809. The credit ranges from $632 for people without children to $7,830 for those with 3 or more. The EIC was temporarily increased in 2021, offering up to $1,502 to taxpayers without children, and Harris supports the return of this provision. Trump hasn't made EIC proposals, according to Wolters Kluwer. Owning a home has become a bigger challenge for millions of Americans, and Harris has proposed $25,000 in down payment aid to certain homebuyers, though details are sketchy. A Democratic Party platform released this summer cites a $15,000 tax credit for first-time buyers. Harris also supports a tax credit for developers to build smaller and more affordable units. Republican Party proposals released this summer also support incentives for first-time homebuyers. Taken together, some type of tax credit for first-time buyers could be in play down the road. Current law already provides some benefits for homeowners, such as the ability to deduct mortgage interest and property taxes for people who itemize on their federal returns.